The way I start, and this is for those of you just tuning in, this is how I create my strong earnings chart list. And I trade, I'm going to say, probably at least 90% of my trades over the last year have come from this strong earnings chart list. And I say at least 90 because I can probably only think of a couple that haven't. But anyhow, I started Zacks. And so this is the home page at Zacks. I come over here under earnings, and you could probably get this information in a lot of different areas. I mean, there's probably a number of sites that you can go to. I actually use the earnings calendar for my blog when I post the earnings for the before the market opens, and then also after the market closes that day. I get it from the earnings calendar, but that doesn't give me anything on revenues. So I go into the earnings releases area of Zacks, and then I go to the date. So right now it's set on today's date, which is the 9th. I'm going to show you an example. I'm going to use yesterday's 8th because I have updated this chart list through yesterday's earnings. I normally, after earnings, will wait at least a few days to see how a stock trades after its earnings, but there's not a whole lot this time of the quarter in terms of earnings reports. That's usually, toward the end of January and throughout maybe the first half of February when we get the lion's share of the earnings reports out. Once I pull this up, you can see the tabs going across here, earnings surprises. I always start with sales surprises. Normally, the sales surprises are fewer than earnings surprises. Not always, but I've just found over the years that it's lesser. So I'm starting with a smaller group. I think it would be more difficult to weed out starting from earnings surprise than it is starting at sales surprise. And then I sort by symbol, so I have them in alphabetical order. And I go down here and I show all of them so I can get them all on the screen here. And so you can see all the companies from March 8th, yesterday, that managed to beat revenue expectations. So we just start here on the top one, AEO. Clearly here's the reported revenues, here's what was expected, and it even gives you the surprise. I just want to know that they beat. I don't really put as much stock into the percentage that they beat as I do just the fact that they beat, because to me, if you can beat Wall Street estimates, you build confidence with analysts, portfolio managers, and that sort of thing. And I think that they're more likely to stick with your company if they know that what you say is what you actually deliver or beyond what you project. So let's just start with AEO. And you see AEO beat on the top line. But if I go over here to the earnings surprise and I sort, notice AEO is not here. So it beat on top line, but it did not beat on the bottom line. So I would eliminate it. That would not be something I'd be looking at. The next one on the list here you can see is AZUL. And by the way, AVDL, when I'm going through here, I normally will include every company that has at least 100 million in revenues. You get a lot of these companies that are much smaller, and I used to do a lot more of those companies, and then I realized by the time I started looking at charts, many of them were small companies that didn't trade many shares, and I ended up eliminating them because from a technical perspective, I wouldn't trade them. They weren't liquid enough. So I always take companies that have revenues of at least 100 million and are beating expectations. That's where I kind of start from. If it's between, say, 60, 70 million and 100 million, a lot of times I'll look over, and if I recognize the ticker symbol and I know the company and I know it's fairly liquid stock, or I think it might be, then I'll include it and I'll continue moving forward. So sometimes I'll go below 100 million in revenues, but generally speaking, the companies that are on my strong earnings chart list are going to have at least 100 million in revenues per quarter. Okay, so the next one that I picked after AEO would be AZUL. Now, if you go over here to the earnings and pull this one up, there it is. So it did beat on both its top line and its bottom line. So far, so good for AZUL. Now, I'm going to switch over and show you a spreadsheet. This is just something you can use. You don't have to use it, but this will give you a little bit of an idea of, so AEO beat revenues, AZUL beat revenues, and I've listed them here, the ones that beat revenues from that Zacks report that I was showing you. Here are the ones that beat EPS, so AZUL, and there's Burlington. And then here's my chart analysis and some of my comments. Now, I don't do this for myself. I'm doing this for the purpose of this workshop. But when I looked at the chart on AZUL, and I'll show you some of these in just a minute, I didn't like it because I didn't think it had enough volume. So it's not, I mean, the chart looked good and it's borderline. I think it was borderline in terms of volume, but ultimately I just decided it didn't have enough volume. And some of these are going to be, you know, kind of borderline cases. And depending on my mood, sometimes I might include them, sometimes I might not. There's really no, you know, stated formula for doing it. It's really somewhat subjective. But let me go back over and show you AZUL. And by the way, here are the ones that I included. I think there were about 14 of these stocks that actually I looked at charts because they beat both top and bottom line. So a number of these, like Kroger here, you see beat on the revenues, but it didn't beat on the EPS. I don't look at the chart. I strictly limit this to companies that beat top and bottom line. If they matched expectations, they're not included. They have to beat top and bottom line. All right, so I'm going to go through these charts now that you see which ones I've made comments on. These are ones that actually did beat both top and bottom line. So let's go back over and take a look at the chart again. All right, so let's now pull up some of these that I just talked about. So let's pull up AZUL. So the chart looks great, and actually volume today on this move is awesome. So this chart looks good. The only problem I was having is looking back on some of these days, the volume was well below 200,000 shares in the day. And I look at the average volume. I want to have average volume of at least, you know, 200,000-300,000. This was just borderline. I just kind of decided I'd never heard of it before. And so I decided not to include it. It's one that probably is borderline, though. It could have been included. I just decided not to. Now let's look at the next one. Burlington Stores, BURL. This one I am adding. Now you look at it, didn't make the breakout, but we have an uptrend. So we've got a bullish move to the upside. I think sideways consolidation, maybe even equal highs with higher lows and ascending triangle. So when I look at this chart, I think bullish thoughts. I'm seeing an uptrend followed by a continuation pattern. I'm expecting it to break out, and I know they just beat top line and bottom line earnings and got a nice reaction too, by the way, even though it's a black candle. This stock was at 116 and opened at 127. That's an 11-point jump with its earnings report. So there's a lot of folks that were interested in the stock. It's in a bullish pattern. Now, might it go back down and maybe even fill the gap first? It certainly could. I'm not saying I would jump in and buy it here, but it's going to go on my list. So it's one that I'll continue to watch going forward. So Burlington I added. CLMT. CLMT looks pretty good, right? I mean, we gapped up, 1 million shares, looks awesome. Problem I have is this stock has a history of doing this, moving up, back down, moving up, back down. Now we're moving up. I still think this downtrend's in play. So when I look at it, I'm not overly excited about it. So I didn't include it. CMD. This one looks pretty good. Nice move to the upside, right? Check out the volume. Yesterday it had the highest volume that it's had probably in, well, certainly this year. And it was maybe 230, 240,000 shares. Not going to do it. Not enough volume. COO, Cooper Companies. Nice breakout here. I wanted to see more volume with the earnings. I mean, the volume, you could probably make an argument that you're okay with, but there's been some pretty big volume days here, and we're breaking out of this sideways consolidation. I would expect that traders would just pounce on this thing. I would be expecting, you know, maybe 1 million, 1.5 million shares, and we were getting like 500,000-600,000 on the breakout. So this one meets the liquidity parameters that I set, but I just don't like, I don't think the reaction is strong enough for me. So again, if I wanted to, I could probably have 1,000 charts if I wanted to look at them, but I'm trying to narrow it down to the best ones. And this one was just okay for me. Let's see, I'll go through a couple more. Let me look at the next one I added. IGT. Talked about this one yesterday. It's in the gambling area, international game. I love this candle. In fact, this pullback, if it had gone back a little bit further, I probably would have bought it today. I was looking at it. It had a red candle back down to about 29.30. And I was looking to see maybe if I get a little bit cheaper. It's now reversed back up. I think the stock goes higher from here. I think it's one of the best looking stocks in the gambling space. And so I believe we're going to see it continue to move higher. So this one I definitely wanted to add into my list. Let's see if there were some others that I wanted to mention here. Let's take a look at MTN. All of these, by the way, are ones that on March 8th beat top and bottom line. So I'm trying to go through the rationale why I would include it or why I wouldn't. Here, great move, big move up. I think volume's probably heavy enough. Problem I have, market's been going straight up. Look at this stock. It continually struggles when it gets up to about 235. After earnings, it's up to 228 and a half. Am I going, what am I going to try and get $6-7 out of this $230 stock to resistance? I'd need to see more. Now, if it had gapped up above these tops and traded up from there, I'd probably have it on my list. But the fact that we're still in this trading range, it's just not really interesting me. And then the last one I'll show you, and this one I did add, I added 3. So I added the Burlington, I added IGT, and then I also added Marvell. And you can see here with Marvell, after earnings, it makes the breakout. Probably the second highest volume day in the past 3 or 4 months. And with that, we got a major triple top breakout. And it also happens to be in a nice space. And that's the other thing sometimes I'll do is I'll pull up my relative chart here. And you can see it is in the semiconductor space, which has been one of the strongest groups. Semiconductors relative to the S&P 500 been on fire for the last month. So you're also getting a stock that's not only breaking out, but it's also in a sector or an industry group that is very strong relative to the S&P 500. So that's my daily analysis. Now, this was a day when we had sales surprises of 67. Now, I'm probably going to scare you to death with this one, but let's go back to early part. Let's do like February 7th. Here we had sales surprises. Oh, 77. That wasn't too bad. Maybe it might even be the end of January. Let's do the week before. Oh, there's 146 all, but sales, well, 78. I know that there have been a lot of days where I've had well over 100. Let's try another day. Let's go back into. It's not letting me go back to February. Let's try this way.
Hey, I've got a couple questions for you, Tom. How many stocks do you follow on a daily basis?
Well, I have in my chart list right now about 260 stocks after updating through yesterday. So, but I don't sit there. I mean, sometimes I will. A lot of times when I do the setups, my trade setups in my blog on Mondays, sometimes I will go through each chart, 260 charts. But usually what I do is I run scans, and I'm going to get to that in a little bit, how I run the scans.
Cool. Also, how long after you add it do you continue watching the stock, or you just have it on the list and then you come back and look at it just based on the scan, or do you basically run through all those charts, in candle glance or something, or?
Well, the charts will rotate. So a stock comes on now, but it's going to report earnings again in 3 months. So it's close to the earnings date. It gets removed. I delete it off of my chart list. And I've actually left a few on. I haven't deleted. I wanted to show that, and I'll get to that also in just a few minutes. So let's take a look next at, so you kind of got an idea of at least going to the website, finding the sales surprises, checking to see if they're also earning surprises. And then if they meet both, then I look at the chart. And if the chart looks good, then they go into my chart list. All right, so let's talk a little bit about the chart list itself. So I have a strong earnings chart list. And on here, I have a number of stocks. I will show you. Let's go ahead and edit the list. Here you will see that I have them sequentially numbered. 2346 is the first one. That's only because I had deleted 2345 because earnings were coming up. Now, 2346, all of these I have in sequential order, but they're also in date order of earnings reports. So you'll see, from Zacks, you saw how I sorted alphabetical order. And notice this particular day, all the A's, and then the G, K, L, N, O, T, and then all of a sudden we go back to C. That's the next day. So that I can tell you that's going to be the next day all the way to U. And then Adobe is going to start the next day. And then you can see I get up to H. Next day is going to start with the C. Once that alphabetical order breaks, and you're into a new day. But the whole point here is that I'm going to keep these on the chart list until it's time for these companies to begin reporting again. So as I update this periodically, maybe every couple of weeks, I'll update this. During the big part of earnings season, I might do it once a week. But once we get beyond the bulk of earnings season, then I might do it every 2 or 3 weeks. And so right before I start adding charts, I will delete some of the old ones. Now, let me give you an example of one that I just added. Well, I added a bunch of them, but let me show you keys. So here you can see keys has just been added, 2607. Right now my chart list goes up 2625. So this is one of the more recent stocks that I just added. If we go all the way back to the top, you're going to see keys was on here. Now I left it because I just wanted to show you all that I can just go through here. But what I would do is just check on the ones that I want to get rid of, and then go to the bottom and end up deleting them. And I'll do that later. But yeah, if I didn't delete them, then I would keep getting these stocks over and over again. Some of them might beat multiple quarters in a row. Some of them, GEF, I think beat this quarter, but or beat last quarter, but I think just came out with earnings that were horrible. And so, some I've had questions before, why don't you just buy, since they're beating top and bottom line, why don't you just buy them and hold them? Well, a lot of times they beat many of these smaller, mid-sized companies, or even large companies. They'll beat one quarter, and then the next quarter they lose and they give it all up. They give up all the gains from their prior quarter. My strategy is not to hold into earnings. I continually update this chart list so I have what I feel like are strong stocks, and then I simply wait for opportunities to get in at better prices. So how do I get in at better prices? Well, I run scans. Obviously, looking at 260 charts every day during the day would get a little monotonous. Well, maybe not for me because I like doing it, but it would still probably get a little tiring by the end of the day if you just continually were going through and looking at these. So if I go back to my page here, home page, dashboard, and I come down here, I can select scans. Now I have, in this particular account, this is my Market Watchers StockCharts account, so this is not the account that I use primarily for my trading, but I did set up a few scans so that you can see a little what I do. Now, the first one I set up is a 10 a.m., what I call 10 a.m. High volume scan, and I can edit the scan by clicking there. And what you see, now this is on the standard scan workbench, but you can do it on the advanced scan as well. But on here, at 10 o'clock in the morning, this is going against all United States stocks. This is not against my strong earnings chart list, although I could make it that way if I wanted. But at 10 a.m., I can run this scan, and it gives me every stock that's doing at least 40% of its volume, its normal daily volume, in the first 30 minutes of the day. So if a stock has got news out there, or it's making a technical breakout, and there's a lot of traders getting on board, this is kind of a scan that I can run sometimes at the beginning of the day to alert myself to those types of stocks. And some of them I might want to trade, some of them I might want to watch, whatever. But that's one thing that I do. And you can see it's very simple. I just use average volume greater than 300,000 shares, average price greater than $1. I don't like stocks less than $1. Just my personal preference. And then volume is greater than its average last 90 days volume. So the current period volume is greater than the average times 0.4. So if the average was 1 million, if a stock had an average volume of 1 million shares and it's done 400,000 or more in the first 30 minutes, it would come up on the scan. All right, but I'm going to concentrate on the scans I run against my chart list. So let's take a look at the high volume scan against strong earnings. Now I timed this, actually I set this up just for this. And so here, if I pick this one and edit the scan, you'll see that now I'm actually scanning against my strong earnings chart list. So it's not going to scan all US stocks. It's only going to scan the stocks I have in this chart list. And I've got 0.75, but I'm even going to add it, make it higher. I'm going to say, give me all the stocks in my strong charts or my strong earnings chart list that have already done their average volume over the last 90 days today. So if their average volume is 1 million shares, they've already done 1 million shares today. And then I am going to update criteria. Now you can see that the average volume times 1 is up here, and I'm going to run this scan. So now this will tell me in there which of my stocks, there are 10 of them that have already, 10 out of 260, have already done their average volume. And here it is. It's not even 1 o'clock. Actually, 12:45 Eastern is the halfway point of the day, and we're almost there. And we've already done an average volume or more. So you can pull them up. ETSY is one. Here's another breakout. This is one that Aaron was just talking about recently. Beautiful chart, great breakout. Here was the earnings news. The breakout above resistance, for the most part, continued moving higher throughout the day. It's continued pushing up, and look at the volume coming in. To me, that's a stock under accumulation. Now, I don't want to chase it when I've got an RSI at 84, but if we get a pullback and we get back closer to that 24 level, especially, I'd love to hit 24 at the same time the 20-day hits 24. Now, I'm not saying it's going to, but it's certainly a possibility. That's why this stock is on my list. But looking at it, the fact the volume's heavy today is not going to change my mind. I think it's overbought. I wouldn't buy it. We come down to the next one, GuideWare, GWRE. Now, this one's pulling back, and it's in the gap support zone. This one's got my attention much more than Etsy, because I do think it's getting closer and closer. The way it's acting right now, I probably would see if maybe we could get a gap support test. And if we can do that while this 20-day moving average is coming up from underneath, my target's probably going to be up around 91. So the closer I can get this back to 85 or so, the better my reward to risk is going to be on this trade. So GWRE, I think, looks very interesting. Next up, LAM Research. So LAM Research, what's going on with this? Well, it's breaking out of a double top. That's pretty big news. So for those of you who like to play breakouts, this might be a potential breakout if you catch this early in the day. But again, we're talking about a company that's just working in its way into overbought territory. So for me, it's probably a little stretched, but clearly it's a solid stock and it's in a great space. Let's just take a look at one more of these. Let's go down here, maybe one you haven't heard of. How about NTNX, NTNX? Wow, this one's very overbought, but you can see why these stocks are on my strong earnings chart list. Huge move up, very strong volume to accompany this price move to the upside. So I think there's accumulation taking place. And again, I don't want to get it when it's strong. I want to get it when everyone's overlooking and it's pulling back. So it's got a ways to go. You might think, well, there's no way it's going to drop 20% down to its 20-day moving average. I've seen some pretty strange things in the market, and that certainly wouldn't even be close to the strangest. So I'm going to wait. But that's one scan. Now let's get rid of this, and let's get rid of this scan here. And let's go back over here and go to the home page. And let's take a look at that other scan that I had here. And that is RSI 40 to 50 strong earnings. Now, if you go through these charts enough, and I would certainly suggest that you do a lot of research and look, try and gain that experience of looking back to these earnings reports and seeing how these stocks trade after earnings. I've spent a lot of time doing just that. And so if I run this scan, actually, let me go back. I don't want to run the scan just yet. I want to show you the scan. All right, so let's edit the scan, then you can see it. But essentially what this is again, I'm scanning against my strong earnings chart list, and I'm looking for an RSI greater than 40 and an RSI less than 50. So I'm getting stocks with RSIs in the 40s. Now, why is that important? Well, many times during uptrending charts, pullbacks that get into the RSI 40 to 50 range can sometimes mark pretty significant bottoms. It also assures me that I'm buying stocks that are not overbought. So I want to get these stocks that pull back to me, that I like. And some might have come back and the RSI might be 40, and I might look at the chart and say, no, I really don't like it. In fact, a lot of times that happens. But it alerts me to stocks that have pulled back, and sometimes I get some really nice trades. So here, let's run this scan. Now, on this one, I got 32, and you'll notice that these are a little different than the others. The others were based on volume. This is based on pullback. Now, it could be a heavy volume pullback. We might see a stock on here that was on the other list. I'm just kind of going through quickly to see if I see any. No, I don't really see any. But we could pull these up, and the other thing you can do is once you pull these scans up, you can rank them by scooter. So maybe look at some of the high scooter rankings that have RSIs back in the 40 to 50s. So these are great relative performers that maybe you're just struggling a little bit, in the near term. So we pull up something like TLRD. I know for a fact retailers are not doing nearly as well today. So we're getting a little bit of rotation away from retail, and that could be setting us up. But this is a stock that had been doing very well. Notice higher prices, lower PPO, negative divergence. We go right back down. We reset the PPO at the center line. The stock has really not been doing a whole lot. And look at the RSI. Instead of chasing with an RSI in the 70s and then going through this, which would be absolutely painful for me, instead, now I'm looking for a stock maybe that's pulling back and has a much better opportunity to move higher from this, from a lower level and near support. I mean, we're kind of hugging this 50-day moving average, which has been great support for the stock. We haven't had a close below the 50-day moving average going back the last 6 months. So now we're sitting on the 50-day moving average. To me, it seems like not a bad entry. I don't own this one, but it's certainly one I would consider. Kohl's, KSS, another apparel retailer. And I actually like this chart a lot. Here we've got an equal top, higher lows. We could have an ascending triangle. We might go back down a little bit lower. If this got back down to around 59.5, 60, I'd probably buy it. Just because that's solid support off of an uptrend. I'm thinking bullish results. I think we're going to follow through with this bull market. So pull back to a support level, a key support level in a bullish pattern would be a time when I would be very interested in the stock. So Kohl's, I think, on this pullback is getting very close to an interesting level. So that's essentially how I go to Zacks. I get the charts. You saw on that little spreadsheet, and that's not exactly how I do it, but I wanted to be able to show you how you can look at both revenues, earnings, get the ones that beat, and then also look at the charts. And you can see here I've got the summary for what we've just gone over. So you gather your data, you identify the companies that beat, you review the charts for technical strength. The ones that you like, you add to your chart list. I keep them sequentially numbered, so I know the ones that have the lower numbers are the ones getting closer and closer to their next earnings report. And then I run scans for my trading candidates. Now, here's the most exciting part of today, and that is, most of you probably know, but I used to work at Earnings Beats with John Hopkins. Actually, was formerly referred to as InvestEd Central. And then I created Earnings Beats back in 2013, late 2013, because I started trading using this philosophy, and I thought it was awesome. So we started Earnings Beats. So that is the only thing that Earnings Beats uses to identify trade alerts, is off of this strong earnings chart list. They call it Earnings Beats Candidate Tracker, which is a strong earnings chart list is all it is. Now, I talked to John last night, and many of you have asked me before, well, can you just send me your chart list? Well, unfortunately, when I left Earnings Beats and came to StockCharts, I had a contractual commitment to Earnings Beats not to give that information away. So I can't, by contract, do that. But I talked to John Hopkins last night, and we've agreed that he is going to sync up his chart list with my chart list, so they're going to be identical. And if you go to their website at earningsbeats.com right now, if you were to sign up, there's a buy one get one free special, where if you pay 1 month, you'll get the second month free, and then you could get the chart list. But what I convinced him to do is to offer all of you a special free, as in $0, a free trial offer, so you can experience the service. But the key part is this chart list will be sent to you. If you're a StockCharts member, you have to be a StockCharts member. You're probably going to need to be more than a basic member, because I think basic members, you only get one chart list. You let John know what your account is, your email or whatever. He sends it to you, and literally you just click on the button and it gets downloaded into your account. You don't have to do any work. But just remember that you do need to cancel within 30 days or you're going to get charged at Earnings Beat. So I want to make sure you understand that. But I thought it was a great offer and very generous. And so I'm really excited to pass that along. And that's it. That's a piece of cake, right?